so mortgage rates are still about 7%. Home sales are up a little bit. I think we've had 2 rate cuts, right? We had 3.75.
Correct. 2 rate cuts, but it just hasn't affected folks with their mortgages yet because the mortgages are pegged to the 10-year.
10-year,
which has really been idle after it did the run-up. And so what we're still seeing is just the sales are low because you've got all these folks. Most of the country has a locked-in rate that has a 2-handle or a 3-handle. And you got to have some really strong motivation to sell your home and move it into a different home, knowing that not only is the house going to be more expensive. I mean, you might be trading dollars if you sell yours, but usually people are moving sometimes to downsize, but oftentimes to upsize. You have more children, need more rooms, et cetera, or you relocate. But when you're going from a 3% mortgage to a 7% mortgage, in most cases, your payment's going to double. And so what people are doing is
at least, yeah.
People are just
maybe
still.
triple, huh? Triple.
No comment.
So they're not moving. They're sitting still. Maybe they're doing more remodeling. They're adding that room on. They're doing things like that. But that's what I'm seeing a lot of in the housing market is just overall transactions. There's just not a lot of.
And for a couple of years, we keep thinking that rates are going to go down, mortgage rates are going to go down. And I do have a chart, and we don't have to show it, but I put the 30-year up there. We're about where we were in October-ish of 22. It's been range bound, really in the high 60s, and
since rates went up,
hasn't really moved.
Well, and I've got clients asking me that too on occasion, like, when do you think we'll be back to 3%? And I said, if we are, I don't want to see what's going on in the economy to cause that, because
That's right.
The rates weren't down at 3% for mortgages naturally. They were down artificially. The government pushed them down because we were coming out of the great financial crisis of 2008. And so as to kind of, kickstart the economy. We've seen rates that low coming out of COVID. So rates don't just want to go down there naturally on their own because the market's healthy.
No, it's a weak economy because if you can just artificially push rates down, but then you get inflation, which pushes all of your rates right back up on
where we are with all the real estate prices. That's now, right. So if you speak to people that are over the age of 60, 7% is not an abnormal rate. It's just what we're dealing with right now. The difference of it is just the price of the home is so different. Mm-hmm. Yep. And so that's where I've gone back to with some clients is who mentioned Europe, where renting. I mean, we've all grown up with this story and this adage that buying a home is the American dream.
Yeah.
You might have to fact check me on this, but I could have sworn I read somewhere that term was actually coined by J.P. Morgan in the 20s because they were trying to figure out ways to finance and they couldn't make enough money on Model Ts. So like, how do we make more money? Well, we've got to do home loans. Everyone's renting or they live on the farm. Mm-hmm. We got to sell them homes. Well, how do we sell them homes? Well, heck, it's the American dream.
Started an industry.
If you don't own a home, then you're not being an American.
Yep, borrow money to buy a house.
So I've told a lot of retirees, if all of your money and a lot of your money is wrapped up in that house, renting ain't so bad, and you've got someone else taking care of the property. You don't have to worry about it. It's a consideration at least. And
you don't have to replace the roof.
Yeah.
You don't have to. You don't have to pay attention to a lot of things. And reality is, a lot of our clients' net worth is wrapped up in their house, and it's hard to just peel off a little piece and spend it on a vacation.
Well, I joke about that too. It's like you have to go to the hospital. You can't bring them sheetrock.
Yes.
And the hardest time to borrow money is when you need it.
That's right.
Right. And so that's a conversation. Part of the financial planning is that if someone has 80% of their net worth in the house, it's a consideration to maybe become a renter.
Yep.
It's not we've been raised so long that is such an awful decision, but really it shouldn't be looked at that.
But part of that factor too is in the financial planning is also looking at the appreciation in the home, right? So if they, like we talked about generations before, have been in the same home for 40, 50 years, they may have spent, $100,000 on a home that's worth $600-$700. Yep. Getting out of it just so you can go, do something else doesn't make a lot of sense either. So that's where conversations with potentially home equity lines or other things, if you are truly illiquid with most of your assets tied up in a house with a huge unrealized gain in it, then there's other options you can look at too for that.